all of this, Oracle's numbers, which we'll get into later in the show, the fact that we're seeing a commitment in terms of money and investment coming from Micron, it all signals supply is needed. They can't build it fast enough.
You're right, Caroline. I mean, I think we've heard that consistently from the hyperscalers. There was that Mecca dinner where Elon Musk and Larry Ellison had dinner with Jensen Huang and just kept saying, more chips, please, more chips. The supply constraint is the problem at the moment. And so, Oracle's the largest holding in our ETF TGLR. It's been a great holding. It's always a better company when Larry Ellison is involved. But what you heard from him was that they have had the biggest orders and demand is as good as they've seen it. So I think you still want to be long this trade, maybe not forever, but certainly for the near term.
Nancy, this is the promote side of the White House's promote and protect policy when it comes to the American technology stack. It was really interesting earlier today in London, Rene Haas, the ARM CEO, weighed in on this protect portion. Just listen to what he had to say.
If you narrow access to technology and you force other ecosystems to grow up, it's not good. It makes the pie smaller, if you will. And frankly, it's not very good for consumers.
There is an interesting linkage here because on the Oracle call, you also had Larry Ellison talking about the potential business of Chinese customers like Temu, for example. Promote and protect. As an investor, do you like the balance of that policy right now?
Yeah, I share the concern that the administration is trying to apply a kind of industrial policy or protectionism to the distribution of this technology. I think in some regards, Ed, it's prudent, but generally speaking, the U.S. has innovated around every problem for decades and decades. So I would rather see competition, allow the ecosystem to grow, and then find ways to limit the Chinese impact. And so I'm more in agreement with that policy of promote and protect. I think that's what you said, but certainly the protect part.
Oracle's obligations, its backlog, it's kind of astonishing, actually. The story's really changed for that company. Just give me a bit more on the thesis. I was really interested in how you're positioning with Oracle, but also, did something change last night? Did they jump to a different level?
They did, for sure. I think, they've disappointed the last 2 quarters. I've owned the stock for 40 years, if you can imagine. I think my average cost is $2. Wow. I know. But again, it's always been a better company when Larry Ellison is engaged. I don't know if you heard the recent, he's, writing code. Now, he is in his 80s, but if money can buy longevity, I think this is the guy that can do it. And so I think what you're seeing is that the focus that they've had on cloud and the way that they are involved in the cloud, which allows them to have more flexibility than some of the other providers. Then you've got the Cerner transaction, which I think is really interesting and not talked about very much, the whole healthcare aspect of the business. So because that is a problem. I mean, we should be applying AI, not just to pharmaceutical development, but care. And so I think there's a lot of moving parts that are now coming together, coming to fruition, and you're seeing it in the backlog, you're seeing it in their enthusiasm. And that to me is, reason to continue to hold the stock. Plus the dividend growth is like 10 to 12% annually. So you're getting paid to enjoy the ride.
Larry, though, really speaking to the fact that they're still supply constrained. I want to go back to supply constraints and to do with China. At the moment, we are so focused on rare earths at the moment, the minerals, the metals, and the fact that they come from China. I just want to pivot to Tesla, and really this affects their humanoid robot side of the equation. It also affects EVs broadly. How much are you focusing on Tesla and the fact that we're starting to make inroads in the China-US relationship a bit?
Yeah, I think that's provided a release valve on the stock. The last time I was on with you, we had the high school girlfriend spat, I don't know what you call it, bromance spat, between the president and between Elon. And the stock has come back from that. one of the times when I was at one of the factories, they talked about the need not to be vertically integrated, and I think that has changed somewhat. So I do think that we do need to get this resolved. We do need to open up regulations. There was a cobalt plant that was 10 years in the regulatory nightmare of trying to come to fruition, and then they finally just walked away from it. Not Tesla, but the company that was trying to do it. So we've got to be better at also harvesting our rare earths. And so I do think it is good news at the margin, but everything about Tesla right now is robo-taxi. So I think that's what investors are paying attention to.
Nancy, 2 weeks ago, I reported that Tesla was targeting internally June 12th to launch robo-taxi in Austin. Then Elon Musk posted on X it would be June 22nd. But they have, in the interim, ramped up driverless testing in Austin. It was just a date, but it moved the needle for many people. Why is that date so significant as somebody that backs the robotaxi thesis?
Yeah, because you wonder if there's something behind the scenes that's going on. There was a recent video of the 2023 accident that it just gives people time to think about and consider other options. But as you point out, and you've been right on this, Ed, all the way through. As you point out, the cars have been driving. I live in Phoenix half the year. The Waymos are everywhere. It's commonplace to us. It's not scary. So I think if any company can do it, it's this company. And if you look at Tesla on a cost per mile, their costs are like 30 to 40% below Waymos. So once they get out there and we start to see the compounding, I think that's going to be the driver of revenue growth. And I may not be in Kathy Wood's $958 billion a year camp, but I do think, the $98 billion in revenues that you're seeing, mostly driven by EV sales, is going to shift. And we're going to see significant growth in ride hailing from robotaxi.
I just want a quick question on IP. It's an interesting story coming from Dana Hull today that Tesla is actually suing a former engineer regarding Optimus in particular. How much does Optimus factor into the future? How much do we want to ensure that that IP remains safely within Tesla's hands?
Yeah, Caroline, I think it's one of the robotaxi, I think is one of the most significant elements of Tesla. They are planning to have thousands of Optimus robots on their own factory floors. If you believe that the BLS numbers that we have 450,000 manufacturing jobs that have gone unfilled, robots are the solution. So we need to protect that IP, and they need to be focused on producing robots. Elon has famously said the robots will make the robots. That would be fantastic. And that's really what we need to see, because if we're moving manufacturing back to the US, we need to have the ability to fill those jobs if we're not going to fill them with people.